Hello everyone, welcome to today's webinar from Mazuma. My name is Ben and I'm a CPA and one of the founders here at Mazuma. I'm also a small business owner, so right there in the trenches with you, and looking forward to chatting with you today. Today's webinar is going to be focused on COVID-19, what we've learned and really where we're at with the PPP loan forgiveness issue. Certainly one of the things that we've learned from COVID-19 is that we all should have been shareholders in Zoom by now, right? If business is funny that way. Value can be affected by all kinds of things. But as we go on today, don't forget that you can submit your questions in the Q&A window by clicking the Q&A button at the bottom of your screen. Submit your question. We'll get to those shortly. As I reflected just on the things that we've seen and experienced with COVID-19 and its impact on small business, is the uncertainty that we face every day, right? It's small business truly is what they've always said it is, an adventure of dealing with unknowns, a roller coaster of ups and downs. You never know what you're going to wake up to. And that's small business, and I think that's probably part of why we all do it. That's the life we enjoy. It's better to face those challenges and learn and grow from them, and as opposed to maybe taking the easier route. But so we are resilient, and maybe we've learned also that we've got safety nets besides the government that we can turn to. And that we all have more capabilities and resources within us and outside of us that we can turn to. So hopefully this time has helped you realize what's important, and that you can kind of reset your priorities accordingly, whether it's in business or in your life. So onto this PPP loan forgiveness situation. One thing to know is that if you haven't gotten a PPP loan, you can still, the funds are still available. Last I saw, a significant amount, and I imagine that the demand is slowing down. So definitely, if you haven't applied for the PPP loan yet, do it as fast as you can, as soon as you can. And if one bank tells you that they are no longer accepting applications, try another bank, because my understanding is that the SBA does still have funds to loan. But once you get that loan, the forgiveness part of that process is not automatic. It requires you to fill out an application that the SBA has provided an example of. Now the bank is going to be the one administering that application for us, the local bank that you get your loan from, but the SBA is kind of driving those requirements. So a couple things to note on that is that essentially after you receive your loan, the day you receive your loan begins this 8-week time period in which you're supposed to use the funds for payroll, rent, and utilities, right? And so there's talk in Washington of opening that 8-week time frame up to a longer time frame, but for right now it's 8 weeks. And that begins the date your loan was funded. So another point to understand on that, though, is that you can, if you pay out payroll during that time frame and or incur payroll expenses, so you don't necessarily have to pay the payroll, you can just incur the payroll expense during that time frame, and that's going to count towards your forgiveness portion. All right. Also, if you've had to reduce your full-time employees during leading up to the time that you got the loan, the SBA is going to be expecting you to rehire those people or replace them with new hires after you get the loan. And if you do, then there won't be any arbitrary reduction in your forgiveness. However, if you don't, then they may ding you on the forgiveness portion of the loan. So there's a little bit of wiggle room if you attempt to rehire the person that you had to let go, but that person declines, then they're not going to ding you for that. Or also, if the people you let go were let go as a result of other causes, not just downsizing as a result of COVID-19, they may not ding you for those as well. But the general rule is that you need to rehire any workforce that you had to lay off leading up to, or prior to the time that you got the PPP loan. And they say you've got until June 30th to restore the full-time employee levels that you were at prior. So basically February 15th is kind of when they start watching and say, did you terminate any employees after February 15th? If so, you need to rehire them or hire new employees to replace them, or else we're not going to forgive the full amount of the loan. So with that, as we all know, and I'll just reiterate here, in order to get full forgiveness of the loan, 75% of it must be used for payroll costs, and those include salaries and health insurance or retirement benefits. It includes state and local taxes as well, not federal employer taxes, but state and local taxes. And so no more than 25% of the loan, the remaining, is meant to be used for rent, utilities, or if your business owns property, mortgage interest. There's no real clarification on what happens if you don't meet that 75% payroll, 25% rent, utilities split. There's no indication of how they're going to reduce your forgiveness amount if you don't meet those requirements. But in order to get full forgiveness, you're supposed to. So a couple things you can do to get prepared with this is making sure that you've got good records. Obviously, the banks are going to be asking for supporting documentation that show where the money went. And so you need to be able to reflect that either in your accounting records or your bank records. Ideally, your accounting records are all aggregated. We're doing this for our clients all the time, right? We're reconciling the bank account, categorizing the payments into the appropriate categories, and that would act as a record for you to bring to your bank and say, hey, look, I spent this much on rent, I spent this much on utilities, and I spent this much on payroll. So you can also, of course, get payroll documents from payroll processors, but essentially the bank is going to want proof of payment. And so keeping good records of where the PPP loan money went is a good idea. All right. Let's see. What if I've not covered? I think I've covered pretty much everything here. Oh, one other item of note. If you received, that goes into the forgiveness, if you applied for the EIDL loan and got the grant from the EIDL, from $1,000 to $10,000, if you receive that, then that is not going to be forgiven. They're going to add that back to your non-forgiven portion on the PPP loan. So you're paying that back after all, it looks like. So with that, let's move into your questions and make sure we cover what it is you came here today to get answers on. First question is, could you tell us what percentage of our income we should be setting aside for quarterly taxes? Also, how can we pay our quarterly taxes for the first time? Is there a link? I haven't been able to get a hold of someone. Okay, Yeah, so this is a big, there's a range of a percentage that you should be setting aside or paying in. But if you have the ability to just isolate your business income and say, of my net profit made from the business, what percentage should I set aside? I would say about 20% of your net profit from your business should be set aside and or paid for quarterly taxes. The easiest way to do that is to go on the IRS Direct Pay website. If you Google IRS Direct Pay, it should take you to the IRS website where you can begin the process of making an estimated payment online there on the IRS website. It's a little bit of a laborious process at first. You've got to create a profile, enter your birthday, and they have to verify your identity and everything. But then you're going to indicate that you're making an estimated payment for 2020, right, for the current year. So the type of payment is a 1040 ES, I think is what it's listed there as, but it's essentially a payment on your 1040 that's an estimated payment for the current year, 2020. And so you can do that right there online. That would be the easiest way to do it. All right, so 20% of the net profit that you've earned in your business, you can pay right there, IRS Direct Pay online. Okay, next question. If you have full-time and part-time employees and get a PPP loan, do you have to hire back all of the employees or just the full-time employees? The full-time employees want to return to work, but the part-time are making more from unemployment. That's right, yeah. My understanding is it has to be the full-time workers that have to be rehired back. That's my understanding as well. They're very focused on full-time employees in the documents that I've read. So in order to meet the safe harbor exemption from those, not have your loan forgiveness reduced, you've got to restore full-time employees by June 30th. And that's if you had to reduce full-time employee levels, between February 15th and essentially when you got the loan, or end of April. So yeah, I believe it is full-time employees. Next question, my SBA loan payments are on hold for 6 months. If I go ahead and make the interest payments, will those payments count toward the PPP forgiveness? So if you start making payments, then yeah, if you're making payments before they're due, then generally those payments go towards principal. And you're not paying interest, you're paying principal if you're paying before the payments are due. And that should go towards the balance that you owe on the PPP loan. So yeah, it would reduce the amount that you have to pay back on the PPP loan overall. Next question, for a sole proprietor, I think 1/12 of the Schedule C profit is included as monthly payroll cost. Yes, is monthly health insurance also counted in payroll costs? So you are able, it's pretty clear that payroll includes health insurance benefits. And if you are a sole proprietor or single member LLC and filing on a Schedule C, then I would expect the portion that you pay for health insurance would go towards the forgiveness and would be included in your application for the PPP loan. So yes, I would include the monthly premium, 1/12 of your annual premium, as part of the payroll cost for the year, because that's if you've got employees, it's included. So I would imagine it's included also for sole proprietors. Okay, next one. I have a newly formed LLC in Florida. Should I file as an LLC taxed as an S Corp? What are the benefits of doing this? Great question. So S Corps, let me do a quick little run through here. So We'll start actually with LLCs. So let's say you own your own LLC and you earn a $10,000 profit for the year. So your gross income minus your deductions, your deductible expenses equals $10,000. That $10,000 is reported on Schedule C of your personal tax return if you're a single member LLC, and it is subject to self-employment taxes and income taxes. All right? Self-employment taxes are FICA taxes, which is the Social Security and Medicare tax that you pay when you're employed. But since you're not employed and you own your own business, you're paying the full amount on the profits of your business. And it's about 15%. So, and then in addition to the self-employment tax, we have the income tax, which is going to be somewhere between 10 and 20% depending on your tax bracket. So let's say you have a $10,000 profit, your self-employment tax is $1,500, your income tax we'll say is another $1,000, so that's $2,500 that you're going to pay in taxes on that $10,000 profit. Okay. Now for the sake of clarity and to kind of speed up the discussion here so I can get to other questions, the S Corp profits, if you have that same profit in an S Corp, it is not subject to self-employment taxes. So the $10,000 is only going to be taxed with income taxes, not self-employment taxes. So instead of paying $2,500, you'd pay just the $1,000, which was the income tax portion. We've got a great video on this when you log into the portal and go to the boot camp section. There's a video called Understanding the S Corp. The caveat here, the catch, is that you have to be on payroll as an S Corp owner. So if you own an S Corp and it is generating profits, the rule is generally you need to be on payroll, paying yourself a W-2 wage. So that eats into some of that savings, right? So anything you pay out to yourself as a W-2 employee is going to be subject to those FICA taxes, and you're going to have to pay them. But you don't have to pay the full $10,000 out as a W-2 wage. So you can maybe pay less than the $10,000 if that's reasonable compensation and avoid FICA taxes on the rest. That's a really quick explanation of a pretty complex issue. General rule of thumb, if your business is making tens of thousands of dollars a year in profits, you're probably going to save money by being an S Corp, taxed as an S Corp, but you've got the administrative burden of setting up payroll for the entity and being on payroll. So there's kind of the summary explanation of that. Hopefully that helps you with that. Next one, do I have loan options if my company was formed on February 20th and I haven't pulled a paycheck yet and don't qualify for PPP? The only loan option other than the PPP, because you do not qualify for PPP in that case, because February 15th was the cutoff. The only other one is the EIDL loan through SBA.gov. And honestly, I should have checked this before the webinar, but I don't know if they're open and issuing more funds. Maybe we can Google that real quick. Is the EIDL loan still have funds? I know the PPP loan, I believe, has funds, but the EIDL loan, I'm not sure. Okay, I'll let you know on that before the end here as we get an answer if we can. Next question, is the 20% of net profit set aside for taxes after we deduct business expenses? Yes. So it's after, you have your $5,000, that your gross income, you deducted $1,000 because you paid it for business expenses. $4,000 would be the net profit, 20% with that would be $800. Yeah, that's exactly right. Next question. If I have a full-time job that I work remotely now and also have a sole proprietor business that has lost all of its revenue due to COVID-19, can you claim partial unemployment for the SP while having a full-time job? I don't believe so. I'm pretty sure that if you've got a 40-hour-a-week, essentially full-time job, that's going to disqualify you from unemployment benefits. The compensation for that loss is the PPP loan. That would be the place to go to get compensated for that. Next one, should we apply for the PPP loan if our business is currently doing well, but we anticipate struggling or may struggle at some point soon? Yes. I would say yes, you should. There's so much uncertainty in the situation still, even though, we're a month or two in. There's still enough uncertainty out there where we haven't even felt the full impact of the COVID-19 shutdown necessarily, right? And so if you're in an industry where you're doing okay still, but feel like next month it could, you could really be hit, or if you can put scenarios together in your mind where you're going to suffer as a result of this, I would apply for the PPP loan. Especially before it runs out. Because eventually, if you do get hit a couple months from now, it's not going to be available. And if worse comes to worse, and let's say that you aren't able to qualify for loan forgiveness, this PPP loan is a great SBA loan. I mean, even if it's not forgiven, it's 1% interest, and the first payment is delayed 6 months. So it's almost free money. It's very cheap money to borrow right now. And there's nowhere in the documents or rules that I've seen that requires you to have experienced detrimental effects. So I would apply. Okay, so it looks like the EIDL loan,
with the exception of agricultural businesses,
is closed down for all industries except for agriculture businesses. So if you don't qualify for the PPP loan, then there's no other federal program out there that I'm aware of that you can get help from. Okay, what can be included in utilities for forgiveness? Electricity bill, internet charges, landline, cell phone, anything else. I think you've got the idea there. That's a great question. Utilities is kind of a broad term, but I've defined it in my mind the same way you have. Electricity, phone, internet, gas and heating, monthly bills that you're paying to keep your doors open, to keep the office going. So I think those are the main ones. There may be smaller ones or maybe unique ones to your industry, but those are the ones that I've got in mind. Next, for foreign owners of an LLC living abroad, sales expenses such as traveling expenses and dinners abroad, the USA, are deductible. Yeah, it doesn't matter if you're a foreign owner or not. Any travel expenses incurred so that you can conduct business with a business purpose behind that trip is going to be deductible. So certainly, yes. All right. Are we about out of questions, I think? All right. Okay. Well, if you got any last minute ones to throw in here before I conclude, go ahead. Otherwise, we're going to wrap up here. This production, this webinar will be posted on our social media pages and available for you. Keep in mind we do one of these webinars every month. We also do Q&A, a couple more Q&A ones where it's mostly focused just on new business and getting straight to your questions. We do those a couple times a month. So The next one of these kind of topic-specific webinars will be in mid-June, but look out for the Q&As. If you're a member of Mazuma, if you've already subscribed with us, then great, but just if not, so you know a little bit more about us, our goal is to keep your records clean, right? Keep your bookkeeping straight and help you take care of tax return needs. Our Business Plus clients get tax planning with our tax professionals and are able to learn strategies to evaluate so they can reduce their taxes, kind of like this S Corp one that we talked about. We get into the details with our Business Plus clients and kind of hold their hands through the process. And then, of course, the business and personal tax returns are prepared and filed for free for Business Plus clients. And so that's what we're all about, and we're all about keeping our fees as low as possible and making it a predictable cost in your business and not wondering how much taxes you're going to owe or how much your accounting bill is going to be. So hopefully we can help you do that if you're not already with us. Looks like a couple more questions came in briefly. For my business, we pay mortgage and homeowners insurance.
Mortgage interest.
Oh, mortgage interest and homeowners insurance. Are both included under rent forgiveness? It specifies mortgage interest. So I don't think the insurance portion of that is going to qualify as forgiveness. Yes, this is recorded. I think I just mentioned that. It's going to be posted on our social media and YouTube channels. Next one, I missed the follow-up answer about the 20% of estimated tax because my computer died. Could you repeat? Absolutely. So your explanation there was perfect. If you made $5,000 and you had $1,000 of business expenses, $4,000 would be your profit, and that $4,000 would be the 20%. So $800 would be the approximate amount of how much you'd want to pay in as quarterly taxes. There's a range there, right? It could be higher, it could be lower, but that's the best thing I can tell you, without having actual numbers. All right, last one. If I got a PPP loan and I work out of my house, how can I qualify for the utilities portion of it? Home office, electricity, cell phone, water. So on the Schedule C, for sole proprietors, there's a pro rata way of calculating utilities for the home office. And so basically you take, and I imagine the banks are going to have to follow this same method when determining forgiveness. But if you pay, let's say, $100 a month for your electric bill, and 20% of your home is used for your home office, meaning it's, 20% of your home is kind of set up for your home office, then 20% times $100 would be your electric bill for the business. So you kind of figure out what's the ratio that my home office is to my whole home, multiply that by the actual expenses, and that would most likely be the method you would use for determining the forgiveness portion. All right, if I give a percentage of my net profits to a nonprofit organization, what percent can I deduct in taxes? So nonprofit charitable contributions like that are not deducted as a business expense unless you are a C corporation. For S Corps and LLCs and sole proprietors, charitable contributions are deducted as an itemized deduction on your personal tax return. So even if you pay for it from your business bank account, it's not going to be counted as a business expense. It's going to be counted as a personal itemized deduction. All right. So clarification. Sorry, it's not homeowners insurance. it's a monthly homeowner's charge for the business condo, like HOA fees and stuff. Again, yeah, that I'd probably have to fall down in the same place as I did on the homeowner's insurance. They're pretty clear. Mortgage interest, utilities. You might, I don't know, you might be able to make a case with the bank that the HOA fees are part of your utilities. So that may be worth checking into. All right, last one, the EIDL loan payments, if they're on hold for 12 months, does the interest accrue during those 12 months? I don't think so. I believe this beginning period, same with the PPP loan, I thought the interest and principal was deferred. You'd have to double check me on that EIDL loan one though. So, okay, well, thank you again for being with us, and good luck to all of you out there, and I wish you the best. Take care.